Welcome to International Business News. I am Lekon Onobanjo, and we start by telling you that natural gas prices in Europe advanced as planned strikes in Norway threatened to further tighten a market that's already reeling from Russia's supply cuts. Benchmark futures rose as much as 2.7% on Monday after three consecutive weekly gains. About 13% of Norway's daily gas exports are at risk amid plans to escalate an impending strike by managers. The nation's oil and gas lobby warned over the weekend. Three fields are set to be shut by the strike starting on Tuesday, while planned action the following day would take out another three projects. Less than 3 weeks before embarking on a series of interest rate increases, the European Central Bank is honing its plans to keep government bond markets from panicking as it does so, a first line of defense against the sovereign debt crisis, akin to the one that struck the Eurozone last decade, became active on Friday. A new instrument to avoid so-called fragmentation and unwarranted blowouts in member states' yields is due soon to enable the ECB to respond to record inflation. When I'll tell you that U.S. equity futures fell and Asian stocks trimmed gains on Monday as slowing economic growth and sticky inflation continued to handicap markets in a quiet session ahead of the U.S. Independence Day holiday. An Asian share index climbed but was off the day's high. S&P 500 contracts shared about 0.5% and European futures pushed higher. Sovereign debt extended a rally triggered by a reassessment of how high central banks can hike interest rates to fight inflation, given that economic expansion is wobbling. Bonds rose in New Zealand and Australia, while Treasury futures were little changed. There is no cash trading due to the U.S. break. As bad as the world's energy crisis has been this year, it would have been much worse without a wetter than usual start to China's rainy season. While heavy downpours in southern China have been a public safety crisis, closing schools and causing fatalities, they've also led to reduced air conditioning demand and surge in hydropower generation. Both have lessened the need for fossil fuels, allowing the world's biggest coal and gas importer to cut purchases and leave more supply for other energy-starved nations. And finally, China Avangard Group is reaching out to its offshore creditors for their support to fight a lawsuit in a Hong Kong court aimed at liquidating the embattled property developer, according to a person with direct knowledge of the matter. Evergrande, which is deemed to be in default on its nearly $23 billion of offshore debt and is working on a debt restructuring plan, aims to submit the banking of creditors as part of the evidence to the court ahead of the first hearing on the winding up petition on August 31, according to that person. And that's all on international business news. On Business Edge, Christie Viljoen is standing by even as we take a look at something as regards PwC's 2022 economic outlook for South Africa. We'll go on a break and that will be the next discussion. Do stay with us.
The continent's most industrialized economy is struggling, like many others. With many of South Africa's key trading partners facing challenges of their own, the ripple effects are being felt in the country. Beyond that, South Africa must deal with already high unemployment rates, tightening domestic monetary policy, an increase of electricity load shedding, increases in fuel prices, and more. Forecasts for the economy are looking more pessimistic as we head into the second half of the year and look beyond to 2023. Joining me from Cape Town, South Africa, is senior economist for PwC South Africa, Dr. Christie Viljoen. Christie, welcome again to Business Edge. Thank you so much for joining me.
Thank you very much for the opportunity.
So in the latest PwC outlook for South Africa, there have been a number of downward reviews for the country. So what seemingly is pushing South Africa's economy down?
Well, we've got international factors and we've got local factors. I think that most people are well aware what's going on in the world right now. Economic growth globally is slower than it was earlier in the year. We see disruptions to trade. We see a high commodity price, lots of inflation, all of this stemming from the situation in Ukraine. And then locally, we've got lots of challenges. We had significant amount of rain in April and May in close to the port of Durban, which is our biggest trading port. We've got challenges with the cost and reliability of electricity. We're seeing record high fuel prices, as in many other countries in the world, and also interest rates are rising as the world moves towards monetary policy normalization. So those are just the current challenges that we face on top of all our other issues with, for example, the highest unemployment rate in the world. That's just, I think, a short summary of our biggest challenges.
So while there was a downside view in January, we've seen, as you said, interest rates climb higher, and unfortunately the rand has also weakened in the past several months. So what does South Africa's microeconomic environment really need at this point?
Well, yes. I mean, earlier this year, when no one could really foresee this Ukraine situation, the economy, as we see it at the moment, at that point, it was much a downside scenario. We were more optimistic about where this economy could be going. And as a country, we definitely need more business and consumer confidence. I think that's the easy answer to it. And then the difficult answer is, how do we get this? If we think of business confidence, for example, we need businesses to be confident about investing in the country, about creating jobs. And a way to get that is, well, there's a long list, a long, deep, wide list, but it comes down to policy certainty. It comes down to the speed at which we are seeing reforms. It comes to stability and expectations that we can think of where will the country be in 2, 3, 5 years from now. And that's a very challenging assumption to make right now. So if we can get business confidence up, we can see investment, we can see more jobs created. So for me, that would be a key factor to improve our economic outlook.
So far in 2022, South Africa's inflation has averaged around 5.9%, which brings it to the higher end of the central bank's 3 to 6% target range. And you've updated forecasts in the report, as you said, a bit more pessimistic at this point in time, with several headwinds, both domestic and international. What's your current baseline outlook for South Africa's growth and inflation as it stands now?
So at the moment, we expect economic growth of less than 2% this year. Early in 2022, it was forecast definitely above 2%. At the moment, probably 1.7, 1.8%, which is moving us back towards a level that is, I want to say, undesirable. We need significantly faster economic growth. One of the big problems this year is obviously the high inflation. So we expect average inflation of about 6.5%. That is above the central bank's target range. So that means that interest rates are going up, probably faster than we previously expected. So that's a bad combination. You don't want slower growth and faster inflation, but that's what we're sitting with at the moment. And in many countries, there's talk about the word stagflation, which we haven't really used significantly yet, but it is something we're concerned about when growth gets very low and inflation gets very high.
All right, let's look at fuel. We've seen fuel prices also rise, not just in South Africa, but across the continent. But for South Africans, it's been 32.8% increase year on year, higher in the past 6 months. And that, of course, is due to factors beyond many countries' control at this point in time. But with public outcry, we saw the government decide to extend fuel tax relief increases. And that's about 14 billion rand. And that was a major conversation just a few short weeks ago. Do you think government has bitten off more than it can chew with such an intervention? What would be the impact of that intervention?
So the intervention is obviously welcomed. Households, businesses, anyone that drives a vehicle, anyone that needs to buy something that's transported, everyone's very happy with that. The problem is it comes with a cost, government revenue that it forfeits or government revenue that it puts back into the economy. It's money that the state planned on having. We are very happy that we can see about 14 billion rand being put back into the economy, but it's not sustainable. Government has said that this reprieve will expire next month. There will be significant pressure on them to continue with it, but they cannot do so indefinitely. And that's the risk when you implement this kind of a temporary, let's call it subsidy. Once you start, it's actually very difficult to get rid of it because it would be very unpopular. So I think government would need to end this quickly, given what the financial cost is, but societal and political pressure will be significant to actually continue with this. We literally had a few hours ago the announcement for fuel prices, the new prices going up on Wednesday, and it'll be new record high prices. So definitely pressure on government to continue with this kind of reprieve.
So interesting enough, the report did point out that the level of output in the economy was actually back to pre-COVID-19 levels. And even with some of these headwinds, particularly the international ones, that was quite good to hear. What's been able to help the economy recover at least to some level of output to pre-COVID-19 levels?
So that's been one of the few good news items that we've gotten in recent weeks, where we see the economic activity report for the first quarter of this year. It's showing us that our economy is back to where it was before COVID. So that's good news. We've made up that loss. We've lost 2 years for it, but still we've come back. The big drivers have been public and private services. It's been financial services, business services, and so on, and obviously government services. Now, these have been reliable growth drivers for quite some time, for the past decade or two. So I'm not surprised that it's been the tertiary sector coming back. The big concern is that when you look at the primary and secondary sector, when you look at mining and manufacturing, for example, and especially construction, which is still significantly lower than it was before the pandemic, we need those industries to come back, because that's where big volumes of investment could come from to create jobs, big volumes of foreign investment. It's also where we produce products for export. So it's good news. The economy is back to where it was, but it's a two-stage recovery. The services are doing well, but the other sectors are not there yet. So it's good news with a bit of bad news included.
So we know the South Africa Reserve Bank's Monetary Policy Committee will meet again in July. What are your predictions for what's going to come out of that meeting?
I think it's quite certain that interest rates will continue rising. We saw a bigger than expected increase in May, 50 basis points increase, and it's probable that they're going to do the same this month. Inflation has been above expectations for quite some time, and it's still rising, and our Reserve Bank is quite strict on that. So while we are on this path of monetary policy normalization, they're probably going to front load that a little bit, and by that I mean that they'll move a lot more interest rates into this year, a lot more increases into this year than previously expected, because as an inflation targeting central bank, that is basically their job. They need to focus on what this is, and it is inflation that is above what they are targeting.
All right, Christie, thank you so much for joining me. We'll keep an eye out on what's happening in South Africa, especially with the announcement of new fuel prices, and we'll be touching base soon. Thank you so much.
Thank you very much.
All right, and the dreaded word there from my guest, stagflation, it is a word you may be hearing more of, as many central banks and, of course, regulators and authorities around the world are concerned about the stagnating nature of the global economy. But one of the responses that people have had to that is an increase in what is known as the side hustle. More and more people, not just here on the continent, but around the world, are looking for multiple streams of income. When we come back from the break, Business Edge will be taking on the rise of the side hustle. Stay with us.
Let's take you through the trending stories that we're looking at on NC4 to watch. And we start by telling you that a $30 million investment is led by USAID to increase Zambia food exports to two East African nations that are experiencing price increases as a result of Russia's invasion of Ukraine. According to a release, 30,000 more tons of corn and soybeans would be transported from Zambia, one of Southern Africa's largest grain growers, to Rwanda and Kenya over the next several days. A USAID designed revolving credit facility will support the business. And away from that, due to the industry's recent recovery from a 2-year recession, net tourist earnings increased by 47% in the first quarter of this year. The most recent Kenya National Bureau of Statistics data reveals that between January and March of this year, travel account receipts increased from 15.2 billion shillings in the first quarter of 2021 to 22.4 billion shillings. Now, because the bank had taken precautions to deal with the new coronavirus, the Central Bank of Egypt agreed to extend the commission-free period for some banking services until the end of 2022. As a result, the CBE decided to keep clients free of all fees and commissions for bank transfer services used in the EGP via electronic channels such as internet, mobile banking, and instant payments network applications. And finally, we tell you that crude oil prices reversed losses and edged up on Monday as concerns of tight supply amid lower OPEC output, unrest in Libya, and sanctions on Russia outweighed fears of a global recession. Brent crude futures for September rose 55 cents to $112.18 a barrel. U.S. West Texas Intermediate crude futures for August delivery gained 44 cents to $108.87 a barrel after also falling $1 earlier. And that's all on NC42 Watch. Tolu is here to take over the show.
Thank you so much, Leka, and thank you to our guests who joined us today. We will have more conversations on African business, the economy, and finance for you live right here at 11 a.m. West African time, Business Edge on News Central. I'm Tolulope Adeleru-Balogun. Don't forget to follow us on social media, download our mobile app, subscribe to our YouTube channel, and watch us on the platforms we are available. Until next time, do have a pleasant Monday, and please make it a money one. We'll see you soon.